When companies publish financial statements, they're expected to reflect a true and fair value of their financial health, guided by international financial reporting standards. Today, we focus on IAS 37, the standard that covers provisions, contingent liabilities, and contingent assets, critical areas where uncertainty and discretion often come into play. To unbundle this, I am joined by Muktar Mohammed, CEO of Finance with Muktar. Thank you so much for joining me today.
Thank you for having me, Rachel.
All right. So, we understand that international financial reporting standards are a sort of accounting standards that sort of govern how particular types of transactions and events should be reported in financial statements. But our focus today is the IAS 37. I'd like you to tell us more about it.
Well, it's just a simple in the international finance law. IAS 37 is just trying to say that you must make every disclosure, assets, liability, issues of litigation, whatever the issues are, you just need to let your shareholders know during your shareholders meeting. So in a nutshell, that's just to do a full disclosure of whatever issues that you think you have, especially when at the long run it may affect the value of the shareholders.
All right. We have the Fidelity Bank example to look at. In its 2024 financial statements, it read, as at reporting date, the bank is currently involved in 77 cases as defendant and 9 cases as plaintiff. Of these 77 cases, one was actually the controversial Sagecom case. With the bank arguing in court that the judgment sum should be 30.7 billion naira, isn't it a misrepresentation that its report says all 77 cases have a total potential liability of 14 billion naira and they only expect to lose 2.27 billion naira? What do you make of that?
You also have to look at those cases and not forget that those cases were not fully concluded at the time that most of these the shareholders were made in their cases that are in court. Just that the one you just mentioned, the judgment came after the shareholders meeting has been concluded. So you expect that to happen maybe during the half-year period. And they also were able to, report to the exchange and came up with a press release as regard the court case. So that, for me, definitely it's cover whatever, because that's a judgment. These other cases that they are talking about, none of these cases have been fully concluded in terms of judgment. So you couldn't say that they were really hiding those numbers. It's just that until a case is concluded, just like they say in the court of law, you are not guilty until after, until after the judge has pronounced you guilty. So that is what I think happened in these cases.
Well, the case has been on for a while, and they sort of knew the amount they would have to pay, just that they were saying that, for them, they think that they wouldn't pay much more than a particular amount. But away from that, I don't want us to dwell so much on this because the case has been on for a while now. Are there legal implications for misrepresenting facts, really? Or is this in any way good for the brand or her investors? I'm not just looking at Fidelity Bank today because I don't want to focus on it, right? However, generally speaking now, because when we take their report from way back and look at what they've been reporting so far, it doesn't necessarily reflect what's on the ground. Some would say there is the contingent, there is provisions, and these two things mean different things. But, there is always that exploitative gap that people want to hide under. But away from it, like I said, I don't want to get into the technicalities of all of that. So let's stay on topical issues now. Talk to us about what you think of, misrepresentation of facts and what this means for the entity and, of course, the investors.
I think you do well being a lawyer, the way you are coming up with these facts and numbers that you are telling us. But again, like I said, away from that, yes, you could see the impact on Fidelity share itself. On the day this case was reported, at the point Fidelity was doing almost 20 naira, you saw it drop to as low as 16 naira 70 kobo thereabout. That tells you what a court judgment can do. It took the intervention of the MD CEO, acquiring more shares. Even that also is still a topic of discussion, whether it was disclosed to the exchange at the time she was about to purchase it or not. But the bottom line is that it took that to even stabilize the shares. But now again, they have seen a recovery. And if we go back to history, Perpetual, we have to go back to Cabri, Nigeria. Remember when they cooked their book through their then MD, Bumioni? It brought that company's stocks to its kneel, and only just of recent that you will see those recovery of Cabri Nigerian PLC. So it could be very damaging to the brand, not just the brand alone, but also to the shareholders in terms of value, erodement of value in their shares. You also have seen issues whereby I just mentioned that a stocks has not been able to present its results as when due. That also have become a problem. You also look to history, look at Oando. Until recently, where you saw those heavy recovery, that was a stock that was moved from a high of about 100 naira to a low of about 2 naira, and just because of corporate governance and issues that were in court. So definitely, some of this has a very negative effect on the brand, not just the brand, it also erodes the value of the shareholders.
Now, I mean, don't you think this sort of casts a shadow on the results and statements companies have been churning out? And, whose responsibility is it to follow through and call out these things when they do happen?
For Fidelity Bank, I think one said the way it is. If by tomorrow or if by some time from now, we are told that Fidelity Bank cannot be able to meet up in a lot of demand, then the blame should goes to the Central Bank of Nigeria. Remember that Fidelity Bank will not submit any result until final approval by the Central Bank of Nigeria as a means of check and balances. Those results normally comes through the approval from the Central Bank of Nigeria. So we expect that the Central Bank should have done everything within their reach to make sure that what is being presented to the public is actually what is there, because that has been the practice, and the Central Bank has to vet the result, approve every detail, and so. And there's been cases where the Central Bank has refused to approve a particular result, and it was sent back for amendment. So if by chance anything do happen in cases like this, you have to blame the Central Bank. And if with cases other than cases that they don't have to go through their regulator for approval of results, then you have to look to the exchange for not doing due diligence.
Right. I like the part where you said the exchange, because I was going to ask you if you want to probably, excuse the exchange from all of this. Now, beyond this item, or, what are the metrics, line items, or provisions do you think investors should pay attention to when assessing a financial institution's financial performance?
You know what my take on that already. I like the profit after tax. I like the risks. I like everything. But as an investor, I always look up to the earning per share and say, okay, what is there for me as an investor? And in this earning per share, how much are you going to pay to me as an investor? Sometimes you see these big numbers, profit, then you see the kind of tens of dividend payouts that they pay up to you. You remember that has happened in a particular bank, giving us good numbers, expanding globally. And yet the shareholders are not happy in terms of the dividend payout that are coming in. And there you see some other small establishment not expanding like that, paying good dividend. So for me as an investor, when the chips are down, it's the earning per share that really counts. And if they have those retained earnings again, that also helps you as an investor. So for me, investors, well, I want to look at the value of your share. I want to look at what that share is bringing to my pocket, not just basically. So if you ask me, I will say, look at the earning per share. Look at the profit after tax. What was it last year? What was it this year? In terms of risks and their assets, is that profit after tax increasing because of assets that they have sold, or actually the profit that they are having was from their core businesses? So you need to look at all those numbers. And at the end of the day, would that number translate into good dividend payout and in turn help for capital appreciation? That's what I look out for me.
Okay, cost metrics, balance sheets, and all of those other things. I will look at a lot of things really before making up my mind. But of course, thank you so much. You don't have all the time to talk about all that now. Maybe some other time we'll talk about it. Thank you for coming on Business Edge today. Muktar Mohammed, CEO Finance with Muktar.